Thank you so much for joining me here at Gambling Investor, where I break down two different portfolios, my gambling portfolio as well as my investing portfolio, which we're going to be taking a look at today. But first, let's take a look at markets. They are up almost a whole percent on the S&P 500. What a crazy year it's been. My portfolio is down, but the S&P is up almost, I think, about 8%, somewhere around there. So let's talk a little bit. NVIDIA, they report the next big thing everyone will be talking about is their earnings. And I'm sure Wall Street is abuzz trying to figure out what is going on. I'd be careful with this one if you're trying to play it to the upside. NVIDIA has a history of selling off from what I remember after they report earnings, even when they blow it out, which they usually do. They usually come in over. So yeah, quite interesting. Plus, it's ran up. If we look at their year-to-date chart for Nvidia, it's up. It's kicking the S&P's butt, up over 20%. So yeah, I would be careful. Is all. All right, quick little disclaimer before we jump into it. Um, I'm not a financial advisor or a gambling advisor, so do your own diligence. And let's take a look at the software stocks. Now, this is something I've been keeping an eye on for the last week or two. I feel like there is a rotation coming back to the software stocks, at least some of them, which, I should say, at least some of them, it's already been happening. We see Snowflake and Datadog are actually up huge for the year because their earnings came in and they blew it away. Everybody else is down, right? We could see here that Salesforce is down 36%. If we look at Adobe, 35%. So will they bounce back? I don't know. It's something I'm definitely thinking about. I wish I had more time to research some of these companies. And, obviously I have Palantir there. Maybe I'll add Palantir. It's kind of holding flat in the 130s. If it drops below 130 in the 120s, I'm definitely going to start thinking about adding a couple more shares to the portfolio. But yeah, that's just kind of where my head is at with that. So let's jump right in. The two stocks I bought. Stock number one, Elf Beauty. Elf Beauty's been crushed the last year or so. So this one has traded all the way down to $52 it's sitting at today. I just couldn't sit by anymore and not buy any shares. It was trading at $150 at its high. If you're not familiar with Elf Beauty, they make cosmetics. They're famous for being viral on TikTok. The kids say that they make very good dupes, so knockoffs of some of the more popular, more expensive, I shouldn't say more popular, more expensive brands. Um, so yeah, definitely very excited about this one. $52. Looks my cost average is 52.08. 10 shares. They report earnings today. It's going to be very interesting. They've been sold off because of the tariffs and all the political risk. Most of their goods are sourced from China. So yeah, they've had a tough year. Their margins have been compressed, but I think they will eventually come back. I think the stock is trading at a 50 or a $3 billion market cap. So yeah, I can't sit by and not pick this one up here. TikTok made me buy it. So this video or this article I think was back in February, if I believe, yeah, February 26th. TikTok made me buy it. Who's discovering new products on social media? So it goes on to say that the hashtag TikTok made me buy it has over 30 million videos on the platform and counting. So yeah, big viral success. So while other beauty companies are treating TikTok as a marketing expense, Elf is treating it as a research and development as well as a sales department. So their strategy is totally different, and I think it's paying off, and I think it's going to continue to pay off. If you don't know, they bought Rhodes Beauty back last year, so they're increasing their shelf space, their products, everything. So this is what they're reporting today, or is expected to report. We can see here 427 million in revenue and then 29 cents. If this thing comes in low, which it could because of all the tariff pressures, I don't think the stock will sell off that much. It's been sold off so far. I feel like I have very, very little risk on it going much lower. And if it does, I will be happy to pick up more shares. So yeah, if it goes higher, we could see this thing, take off and, be trading in the $60 range, maybe even 70s, depending on, what they say and what they guide for. All right. The next stock I bought is JP Morgan Chase. Yep, I bought 2 shares. My last video, I talked about some of the financial stocks that I've been thinking about adding to the portfolio. This was one of them. It's the biggest bank, in the world, and they are adapting blockchain technology to make payments faster. If we can see here, their earnings per share has gone up over time, and 15 to 20 or 20 from 15 may not seem a lot like in 4 years, but realize as these guys are paying a dividend too. It's a 2% yield, so something to think about. They're also buying back shares. As you can see, they had 3 billion shares here, and we've traded all the way down to under 3 billion. So yeah, slowly getting lower and lower over time. So dividends, stock buyback. Yeah, I think this stock is kind of a no-brainer at this point. So they are also leveraging blockchain technology. This is Connexus platform that they've created. Yeah, you can do blockchain deposit account. They got the JPM coin and advanced programmable payments. I haven't completely done a deep dive into exactly how this thing works, but yeah, I plan to do some more research on it. And we will lastly look at Tom Lee. If you're not familiar with Tom Lee, he's commonly commentating on CNBC. He is the head of investments of Fundstrat. Big researchers over there doing a lot of work. Tom Lee has been on CNBC for the last year or two, just making calls, and most of them being pretty on point. So yeah, everybody kind of looks at him and they listen to what he's saying. And in this interview, he basically suggests the tech-forward banks like JP Morgan and Goldman Sachs could become the next Mag 7. So what he's basically saying is they could re-rate to higher multiples. So if they re-rate, which I think they're usually trading in the 15 range. Actually, we can go back and look at JP Morgan's stats currently, and we'll look at their PE ratios real quick. And yeah, 10 to 15 for the forward PA, pretty close to the same over the last 5 years. So yeah, if they re-rated to multiples in the 20s, it would be one thing. But I mean, imagine them. Some of these are trading in the high 20s. Some of these Mag 7 stocks, not even to mention Tesla, which I don't think it'll ever get to those levels. But if you're trading in the 30s, which just seems impossible. I don't think that'll happen. But even if they re-rated to where they're trading in the 20 or low 20s, that would be something else. So you never know what's going to happen. So yeah, those are my buys for the day. Thanks for joining. I'll see you on the next one.